Welcome back to The Deep Dive. We're the show that, takes those complex topics and really boils them down to what you need to know.
That's the goal.
Today, we're jumping into something that sounds maybe a little dry, honestly. The Employer Identification Number, or EIN.
Uh-huh.
But trust me on this, it's absolutely fundamental. It's like the unique fingerprint for nearly every business in the U.S. It's your gateway to tax compliance. A really crucial first step.
It absolutely is. And for this deep dive, we're really going to dissect the heart of getting one. IRS Form SS4, the application for employer identification number.
Right.
And this isn't just about, filling in boxes. It's truly understanding the identity of your business in the eyes of the IRS. We'll break down its purpose, how you actually apply the different methods, and then really importantly, we'll walk through it line by line.
Okay.
Demystify it. Because getting this right, understanding it up front, can save you so many headaches later on. It unlocks those big business steps.
And why should you, listening right now, care about this? Well, maybe you're dreaming up a new venture, right? Or you're about to hire your first employee that's huge. Or maybe you're restructuring an existing business. An EIN is almost certainly going to pop up.
Almost inevitably.
So by the end of this, you won't just know how to get one. You'll actually feel, well-informed, confident about tackling this key tax piece. So let's pull back that curtain.
Let's do it.
All right, so let's kick things off with the absolute basics. Employer Identification Number. I often hear people describe it as like a social security number, but for your business. Is that a fair starting point, or does that analogy kind of break down?
It's a fair starting point, yeah, but we need to clarify that distinction right away. An EIN is a 9-digit number, and it is assigned by the IRS, much like your personal SSN.
Okay.
However, and this is the key, an EIN is strictly for tax filing and reporting for entities. So we're talking sole proprietors in certain cases, corporations, partnerships, estates, trusts, a whole range of organizations. The critical thing to remember is EIN is for business activities only. It is absolutely not, under any circumstances, a substitute for your personal social security number or an ITIN, an individual taxpayer identification number.
Okay, so you can't use them interchangeably at all?
No, absolutely not. Trying to use one for the other, it's like trying to pay your personal electric bill with your company's account number. It just won't work, causes a mess for everyone involved, especially the IRS.
That makes perfect sense. So we know what it is. Now, the big question I think a lot of listeners might have is, okay, but do I actually need one? Because, not every little side gig immediately needs an EIN, right?
Yeah.
What are those common triggers?
Exactly. And the IRS instructions, particularly the purpose of form and do I need an EIN sections, spell this out. Let's take a sole proprietor, for example.
Yeah.
You might think, oh, I just use my SSN. And often, initially, that's true, especially if you're just reporting income and expenses on a Schedule C or, a Schedule F on your personal 1040.
Right, the standard way.
But the moment that sole proprietorship takes a bigger step, and say you hire employees, that's a big one, or you set up a qualified retirement plan, like a KEO plan, or your business activities mean you have to file, say, excise tax returns, employment tax returns, or returns for alcohol, tobacco, firearms. Even if you become a payer of gambling winnings.
Wow, okay.
Suddenly, boom, you need an EIN. And beyond sole proprietors, pretty much any corporation, partnership, estate, or trust generally needs an EIN right from the get-go.
So it's not just about having employees then, it's also about the type of legal structure you choose, or even specific activities your business gets into. It sounds like the IRS wants a unique ID for every separate sort of taxable person.
You absolutely nailed it. It's about recognizing distinct legal and tax entities. Think about this common path. You start as a sole proprietor, business grows, you decide, okay, I need liability protection, or I'm bringing in a partner. You incorporate or you form a partnership. That fundamental change in your organizational type, that requires a brand new EIN. You can't just carry the old one over because legally and for tax purposes, a new person has been created, separate from you as the individual owner. And for bigger structures, like an affiliated group of corporations, each one needs its own EIN.
Each subsidiary, basically.
Exactly. The IRS needs that clear, auditable trail for every entity with a tax obligation. It's like giving every player on the economic field their own unique jersey number.
That makes sense. It sounds like there are quite a few triggers, and yeah, some are definitely less obvious than others. Before we actually jump into the application form itself, are there any really crucial tips or reminders for managing your EIN once you have it? Because getting it is one step, but staying compliant is ongoing.
Absolutely. And these practical points, they often get missed, and that can lead to real headaches later. First, and this is so critical, you must keep your EIN information up to date with the IRS.
Okay.
If there's a change to who your responsible party is, we'll dig into what that means in a bit, but it's basically the person with ultimate control.
Right.
Or if your business address changes, or even just its physical location moves, you have a strict deadline. You have to report these changes within 60 days.
50 days, okay.
How do you do that? You use Form 8822B, change of address or responsible party business. Seriously, think about missing a crucial tax notice because it went to your old address. This form is essential for keeping those communication lines open.
That's a really good point. Don't want IRS mail going missing. What about applying for too many EINs? Is that something people accidentally do? Like they panic and apply multiple ways?
It happens more than you'd think. The general rule is file only one Form SS4 for each distinct entity.
Okay.
So a sole proprietor, for instance, usually only needs one EIN, even if they run, say, 3 different types of businesses under that sole proprietorship umbrella, maybe using different trade names. It's still one legal entity.
Right.
But as we just touched on, the big exceptions are when that sole proprietor incorporates or forms a partnership. That creates a new legal entity, so new EIN needed. Same for each separate corporation in an affiliated group.
So the key is legal entity.
Precisely. One EIN per distinct legal entity, filing multiple SS4s for the same entity. That's just going to get you multiple EINs, and then you've got an administrative cleanup job on your hands trying to sort it out with the IRS.
Yikes. Okay, avoid that. What if you're in that stressful spot where you've applied, maybe mailed it in, but a tax return is due, or you need to make a tax deposit, and the EIN hasn't arrived yet? Is there a placeholder or something?
Yes, and the IRS has a clear procedure, thankfully. If a return is due, where the EIN normally goes, you write applied for and the date you actually applied.
Okay, applied for and the date.
Crucially, do not put your personal SSN there instead. That just creates confusion.
Right.
Now, if it's a tax deposit that's due before you get the EIN, you need to send that payment directly to the specific Internal Revenue Service Center for your state or region.
Not just anywhere.
Right. Make the check or money order payable to United States Treasury and very clearly show your name exactly as it appears on the SS4 you submitted, your address, the type of tax it's for, the tax period it covers, and again, the date you applied for the EIN. This helps them match it up later.
That's super practical advice. Good to know there's a process. And I think I saw something about a limit. Can you only get one EIN per day or something like that?
You did see that, and yes, that's a key little nugget that surprises people. To ensure fairness and prevent potential misuse, the IRS limits EIN issuance to 1 per responsible party per day.
1 per day. Wow.
And that limit applies across all application methods: online, phone, fax, mail. Doesn't matter how you try. So if you are the designated responsible party for, say, a trust, that limit applies to the grantor or owner. For an estate, it applies based on the decedent or debtor.
Interesting.
It's a quiet but really important control the IRS uses to prevent someone from just churning out multiple EINs rapidly. Keeps things orderly.
Like a daily quota. Makes sense. Okay, so we got the what and why down. Let's get practical. How do you actually apply? You mentioned different methods, and crucially, only picking one.
Absolutely right. There are several ways to do it, and picking only one method per entity is vital. Trying multiple ways at once is the fast track to getting duplicate EINs and creating that cleanup problem we talked about.
Okay, so choose your path carefully. What's the go-to method these days, the fastest, most common one?
For most folks here in the U.S., the online application at irs.gov is definitely the winner.
Okay.
Its main advantage is speed. If your legal residence, principal place of business, or main office is in the U.S. or a U.S. territory, you can apply online and get your EIN immediately.
Wow, instantly.
Instantly. At the end of the online session, you can view, print, and save your official EIN assignment notice right then and there. Super convenient.
That sounds ideal. What's the catch? Is there a requirement?
The main requirement is that the responsible party, the principal officer, general partner, owner, grantor, etc., must have a valid U.S. taxpayer identification number already. That means an SSN, an existing EIN, maybe from another business, or an ITIN.
Okay. So if you don't have one of those, the online route isn't for you.
Correct. And also, if your principal business location isn't in the U.S. or its territories, the online application isn't an option either.
So what about those international applicants then? If they can't use the website, how do they get an EIN? Is there still a relatively quick way?
Yes, for international applicants, and let me stress, only for those with no legal residence, principal place of business, or main office in the U.S. or territories, there's a telephone option.
A phone call. Okay.
You call 267-941-1099. Important note, it's not toll-free. and you need to call during specific hours, 6 a.m. to 11 p.m. Eastern Time, Monday through Friday.
Got it. And what do you need for that call?
It's highly recommended, almost essential, to have a completed Form SS4 right in front of you before you call. The IRS representative on the phone will literally use the information from your completed form to set up your account and give you the EIN right there during the call.
So have the form ready.
Absolutely. And just to hammer this home, the IRS no longer issues EINs by phone for domestic taxpayers. That's a common misconception. Phone is strictly for eligible international applicants now.
Good clarification. Okay, so online for most U.S. folks, phone for international. What about faxing? Does anyone still fax things to the IRS?
Believe it or not, yes, the FaxTin program is alive and well, and it can actually be pretty efficient. You can generally get your EIN back by fax within about 4 business days.
4 days, it's not bad.
Not bad at all. You just complete the form SS4, make sure it's legible, and fax it to the right number. For domestic applicants, 50 states or D.C., that's 855-641-6935. For international folks or those in U.S. territories, the number depends on where you're faxing from. If you're faxing from within the U.S., it's 855-215-1627. If you're faxing from outside the U.S., it's 304-707-9471.
Bit confusing, but okay. Key detail.
The absolute key detail for faxing. You must provide your own return fax number on the form. That's how they send the EIN back to you. And the fax tie-in service runs 24/7, so you can send it anytime.
Okay, fax is an option. Definitely faster than, I assume, mailing it in. What's the timeline if you go the old school paper route?
Yeah, mail is the slowest option, as you'd expect. If you choose mail, you complete the SS4, sign it, date it, and mail it to the correct Cincinnati, Ohio address.
Both domestic and international go to Cincinnati.
Yes, but to slightly different attention lines. For U.S. applicants, Internal Revenue Service at NIAN IIN Operations Cincinnati, OH 45999. For international U.S. territories, Internal Revenue Service at AIN International Operations Cincinnati, OH 45999.
Got it. And the wait time?
You're looking at approximately 4 weeks to get your EIN back by mail. If you're waiting and need to check on the status or verify a number from a mail application, you can call the Business and Specialty Tax Line at 800-829-4933. Just, be prepared for possible hold times.
4 weeks.
Yeah.
Plan ahead if you're mailing. Okay, one more scenario. What if you're using an accountant or a lawyer to help set up your business? Can they handle the EIN application for you, or do you have to be the one talking to the IRS?
That's a very common question, and yes, there's a way to delegate. That's the third-party designee sections for right there on line 18 of Form SS4.
Oh, okay.
This lets you authorize someone specific, like your CPA or attorney, to answer the IRS's questions about how the SS4 was filled out, and importantly, they can receive the new EIN directly on your behalf.
That sounds handy.
It is. It saves you the direct interaction if you prefer, but there's a crucial caveat. This designing authority stops the moment the EIN is assigned and given to them.
Oh, it's only for the application itself.
Exactly. They can't then act on your behalf for other tax matters unless you give them a formal power of attorney using Form 2848 or a tax information authorization on Form 8821. Those are separate steps.
All right.
And one more quirky but important rule for the designee: if the third-party designee's address or phone number is the same as the taxpayer's address or phone number on the form, the application must be mailed or faxed. You can't use the online or phone method in that specific situation. It's likely a fraud prevention measure.
Interesting little detail there. Okay, that gives us a really clear picture of the how. Online, phone, fax, mail, pick one. Now, the main event. Let's actually unmask Form SS4 itself. Because knowing how to fill in each line correctly, that's where the details really matter. What's a general game plan before we start going line by line?
The biggest piece of general advice, honestly, sounds simple, but it's often missed. Read the instructions carefully for each line that applies to you. And this is key. For any line that genuinely doesn't apply to your specific situation, enter NA.
Not just leave it blank.
Right. Don't leave it blank. Putting NA shows the IRS processor that you saw the line, you considered it, and it's not applicable, rather than looking like you just skipped it or forgot it. It can actually help speed things up and avoid them having to contact you for clarification.
Smart tip. Okay, let's start at the top. Lines 1 and 2, entity identification. Line 1 asks for the legal name. Sounds simple, but Any traps here?
It seems simple, but precision is everything on line 1. This is where you put the exact legal name of the entity or individual applying. It has to match word for word, character for character, what's on the official legal document.
What kind of documents?
Your social security card if you're applying as an individual needing one, like a sole proprietor needing it for employees, your corporate charter if you're a corporation, the trust instrument for a trust, the partnership agreement, etc. It's a required field.
Right.
For a sole proprietor, remember, this is your individual legal name, first, middle initial, last, not your business name that comes next. And absolutely no abbreviations or nicknames on line 1 for individuals. For trusts, estates, partnerships, corporations, Indian tribal governments, it's the full, exact legal name from the founding documents. Perfect match is the goal.
Got it. Exact legal name on line 1. Then line 2 is for the trade name, the DBA, doing business as. How does that relate to line 1, and why is consistency important?
So line 2 is where you put your public-facing business name, your DBA. If it's different from the legal name on line 1, many businesses operate under a different name than their legal one.
Right.
Now, the critical advice here is something that trips people up. You need to choose one name, either the legal name from line 1 or the trade name from line 2, and use that same name consistently on all the tax returns you file for that entity.
Pick one and stick with it.
Exactly. Don't use the legal name on your income tax return and the trade name on your payroll tax return. Pick one for all IRS filings related to that EIN. It helps the IRS match everything correctly and prevents confusing notices down the line.
Okay, makes sense. Consistency is key. All right, lines 3 through 6 deal with contact and location info. Line 3 is care of name. Who is that for?
Line 3 is used when the mail isn't going directly to the entity itself, but rather to someone acting on behalf of the entity. Most commonly, you see this with trusts, where you'd enter the trustee's name, or for estates, you'd put the executor or administrator's name here. It can also be used if the entity has designated a specific person, maybe an officer or manager, to receive all their tax information. You put that person's full name here. It just ensures the mail gets routed correctly within a larger structure or to the responsible individual.
Gotcha. Then lines 4A and 4B are for the mailing address. That's where all the official IRS stuff will go.
That's right. Lines 4A and 4B are for the primary mailing address, where the entity wants to receive all its correspondence from the IRS. If you filled in line 3, this will be the address for that trustee or executor. If line 3 is blank, it's the entity's direct mailing address.
And any specifics for, say, international addresses?
Yes, for international addresses, you have to include the city, the province or state, the postal code, and the full country name. No abbreviations for the country name are allowed. And, circling back to that crucial reminder, if this mailing address changes later on, Form 8822B within 60 days. Absolutely vital.
Don't forget, Form 8822B.
Okay.
Then lines 5A and 5B are for the street address, if it's different from the mailing address. What's the deal here? Can I use a P.O. box?
No P.O. box is allowed on lines 5A, 5B. This needs to be the physical location of the entity's principal place of business or principal office. You only fill this out if it's different from the mailing address you put on line 4.
So even for my home-based business, this would be my home street address.
Correct. If your home is your principal place of business and your mailing address, maybe a P.O. box, is different, your home street address goes here. Same rules apply for international addresses: city, province, state, postal code, full country name. Line 6 is straightforward. Just the county and state where that principal physical location from line 5 is situated. It helps the IRS geographically pinpoint your main base of operations.
All right, now, lines 7A and 7B, the responsible party. This sounds significant, like the IRS is really trying to identify the person ultimately in charge, no matter the structure. Who exactly is the responsible party?
You're right. This is a truly core concept, and yes, it's about the IRS cutting through legal layers to find the actual human being who has ultimate control. The official definition is the person who has ultimate ownership or effective control over the entity's funds and assets.
Effective control. What does that mean practically?
It means the individual who can, directly or indirectly, control, manage, or direct the entity and how its money and assets are used. They have that ultimate say. And crucially, unless the applicant is a government entity, the responsible party must be an individual, a natural person.
Not another company.
Not another company, generally. Even if Corporation A owns subsidiary B, the responsible party for subsidiary B needs to be an individual within Corporation A who has that ultimate effective control over subsidiary B.
Wow. Okay, so they always want a person's name. How does that work for different entity types?
Good question. For publicly traded entities or those registered with the SEC, the responsible party is typically the principal officer for a corporation or a general partner for a partnership. But again, it has to be an individual. If a corporation is the general partner, then the responsible party is the principal officer of that corporation. For tax-exempt organizations, it's usually the principal officer as defined in the Form 990 instructions. Government entities are the exception. You can put an EIN on line 7B if it's like the agency head or someone legally binding the entity. For trusts, it's the grantor, owner, or truster. For decedent estates, it's the executor, administrator, or personal representative.
And what ID number do they need for this person on line 7B, SSN, or ITIN? What if they're foreign and don't have one?
For almost all non-government entities, the responsible party must provide their Social Security number, SSN, or Individual Taxpayer Identification Number, ITIN, on line 7B. It's mandatory.
Okay.
The main exception is if the responsible party is a non-resident alien who doesn't have and isn't eligible to get an SSN or ITIN. In that specific case, you can leave line 7B blank or enter something like NA or foreign.
Got it.
And just like the address, if this responsible party information changes, maybe the person leaves or ownership shifts, you guessed it. Form 88822B within 60 days. It's critical for the IRS to always know who that ultimate point person is.
Okay, let's unpack this next section. LLCs, limited liability companies. They seem to be everywhere, but honestly, they could be a bit of a head-scratcher for folks because they're so flexible tax-wise. Lines 8A through 8C are all about LLCs. How does the IRS see an LLC, and where do people get tripped up here?
LLCs definitely add a layer, you're right. They're popular because they offer that liability protection like a corporation, but often with simpler administration, depending on how you structure them. They're formed under state law. But for federal tax purposes, the IRS basically treats them by default in one of a few ways, or lets them choose.
Okay, what are the defaults?
By default, a domestic LLC with only one member, one owner, it's treated as a disregarded entity.
Disregarded entity. That sounds like it doesn't exist for tax purposes. But you said earlier they sometimes need an EIN.
Right. It's disregarded as an entity separate from its owner specifically for income tax. So all the income and expenses just flow through and get reported on the owner's personal tax return, usually a Schedule C on their 1040, just like a sole proprietorship.
Okay, so single member equals disregarded sole proprietor by default. What about multiple members?
If a domestic LLC has two or more members, the default classification is a partnership. It files a partnership return, Form 1065.
Got it. But they can choose differently.
Yes, that's the flexibility. An LLC can elect to be taxed as a corporation instead of its default. To do that, it files Form 8832, Entity Classification Election.
Okay.
Or if it wants to be taxed as an S corporation, which can sometimes offer tax advantages, particularly around self-employment taxes, but has complex rules, it files Form 2553, Election by a Small Business Corporation.
So two different election forms. Any common mistakes here?
A really common one. If your LLC is filing Form 2553 to be an S corp, you do not also need to file Form 8832. The S corp election on Form 2553 handles the corporate classification aspect. Filing both is unnecessary and can cause confusion.
Good tip. Form 2553 is enough for an S corp election. What about, say, a married couple owning an LLC together in a community property state? Does that count as single member or multi-member?
Yes, the community property state wrinkle. States like California, Texas, Arizona, etc. If an LLC is owned solely by a married couple in one of these states, and they choose to treat the entity as a disregarded entity for federal income tax, then on line 8B, number of LLC members, they would enter 1.
Even though there are two people?
Yes, if they elect that disregarded status in a community property state context, it reflects their choice for federal tax treatment. So LLCs are powerful, but you really need to understand their tax classification default or elected because it drives how you fill out the rest of your tax forms.
Definitely requires careful thought. All right, let's move to line 9A, type of entity. This feels like more than just checking a box. It's like you're defining the fundamental legal nature of your operation for the IRS.
That's a good way to put it. This line is about identifying your entity's legal structure, not necessarily its tax classification election, though they're often related. It's crucial to pick the best fit. Let's walk through the main options. Sole proprietor. You check this if you're an individual filing a Schedule C or F, especially if you also have that qualified plan, or need to file those excise, employment, alcohol, tobacco, firearms returns, or pay gambling winnings. You'll enter your SSN or ITN usually, or NA if you're a non-resident alien without U.S. income. corporation. This is for standard C corporations or S corporations. If you check this, you must also enter the income tax form number you'll file, usually 1120 for C Corp, 1120S for S Corp.
And that S-corp warning again.
Yes, big warning. If you put 1120S here because you intend to be an S Corp, you still must timely file that Form 2553, usually within 2 months and 15 days of the start of the tax year. If you don't or it's not approved, the IRS defaults you to a C Corp, Form 1120 filer, which could mean unexpected corporate taxes.
Yeah.
Huge potential pitfall.
Definitely need to follow through on Form 2553. Okay, what else on 9A?
Personal Service Corporation, PSC. This is specific. It's a corporation where the main activity is performing personal services like health, law, engineering, accounting, consulting, performing arts, substantially by employee owners who own at least 10% of the stock. They have some different tax rules. Other nonprofit organization. For nonprofits that aren't churches or church-controlled, you specify the type, e.g. educational organization. You'll likely need to file a separate application for tax-exempt status, Form 1023, 1023, EZ, or 1024. You might enter a group exemption number, GEN, if applicable. Section 527 political orgs also check this and specify estate. For the legal entity created after someone passes away, you enter the decedent's SS Uniten. Plan administrator. Use your existing TTIN if you have one. REMIC. Real estate mortgage investment conduit specialized entity. State, local government, and federal government. Self-explanatory for government entities. Indian tribal government enterprise. For recognized tribal governing bodies or enterprises. Other, the catch-all. If nothing else fits, check this and specify the type. Crucially, don't just leave the specification blank.
Okay, that other box seems important. What common things fall under other that listeners might encounter?
Several common ones end up here. Household employer. If you as an individual hire someone for domestic services, nanny, cleaner, caregiver, and need an EIN for payroll taxes, you check other and write household employer and your SSN. If a trust is the employer, use the trust's EIN, household employer agent. A specific status for agents handling payroll for certain home care recipients, QSub. Qualified Subchapter S subsidiary, a specific type of S Corp subsidiary, withholding agent. If you need to file Form 1042 for payments to foreign persons, check other and write withholding agent.
And this brings us circling back to those disregarded entities again. We touched on them with the LLCs, but it still feels counterintuitive. Disregarded, but needing an EIN. Can you give us the full picture on why they need an EIN, even if ignored for income tax, and exactly what they should write on line 9A?
This is probably one of the most confusing areas, so let's nail it down. Remember, disregarded means treated as not separate from its single owner for income tax. Think single-member LLCs mostly. Income loss flows to the owner's 1040.
Right.
However, that same entity is treated as separate and does need its own EIN for several other key tax functions. It's like they're invisible for income tax, but very visible for other things.
Okay, like what other things?
Primarily, reporting and paying employment taxes. If that single-member LLC hires even one employee, it needs its own EIN for payroll filings. Forms 941, 940 W-2s. Registering for and paying certain excise taxes using forms like 637, 720, 2290. Claiming certain tax refunds, like fuel tax credits on Form 8849. And a big one for international structures. A U.S. disregarded entity wholly owned by a foreign person needs an EIN to file Form 5472, information return of a 25% foreign-owned U.S. corporation or a foreign corporation engaged in a U.S. trade or business.
So even if the profit goes on my personal return, if my LLC hires someone, the LLC itself needs an EIN for the payroll taxes.
Exactly. That's a critical distinction.
So how do they signal this specific status on line 9A? What do they actually write in that other box?
This is where you need to be precise to get the IRS account set up correctly. If the disregarded entity needs the EIN for employment taxes, excise taxes, or maybe just a state requirement, they check other on 9A and write disregarded entity, or maybe disregarded entity sole proprietorship. If it's that foreign-owned U.S. disregarded entity needing it for Form 5472, they check other and write foreign-owned U.S. disregarded entity Form 5472. If it's that foreign-owned U.S. disregarded entity needing it for Form 5472, they check other and write. Now, if the disregarded entity, like an LLC, is getting an EIN because it's electing to be taxed as a corporation by filing Form 8832 or 2553, then it checks the corporation box on 9A, not other, and it should write in single member and the relevant form number, 1120 or 1120S. If it's that foreign-owned U.S. disregarded entity needing it for Form 5472, they check other and write. If a disregarded entity suddenly gets more owners and becomes a partnership by default, it checks the partnership box on 9A. If it's that foreign-owned U.S. disregarded entity needing it for Form 5472, they check other and write. And if a foreign entity wants to be disregarded and needs an EIN for that, it checks other and writes foreign disregarded entity.
Wow, that's super specific. It really matters what the disregarded entity needs the EIN.
It absolutely dictates how you complete line 9A. We can definitely put a quick reference for those specific phrases in the show notes for folks.
Perfect. Okay, that was a deep dive just on 9A. Let's move to line 10, reason for applying. This seems straightforward. Why do you need the number? And I assume just check one box here.
Correct. Only one box on line 10, and you can't put NA. This tells the IRS the primary trigger for your application. Let's quickly hit the reasons. Started new business. For a genuinely new venture needing an EIN, specify the type, e.g. restaurant web design. Don't check this if you're just adding a location to an existing business that already has an EIN. Hired employees. For an existing business that's now hiring and needs the EIN for payroll, remember the push towards EFTPS, Electronic Federal Tax Payment System, for deposits. Banking purpose. For non-business groups needing an EIN just to open a bank account, like that bowling league or investment club, specify the purpose. Change type of organization. Big one. Sole prop becomes corp, partnership becomes LLC, etc. Specify the change, e.g. sole prop to S corp. Signals a new legal entity needing a new EIN. Purchased going business. If you bought an existing business, critical point. You generally don't use the old owner's EIN unless you bought the stock of a corporation. Buying assets usually means you need your own new EIN. Created a trust. Specify the type. Note the exception for some simple grantor trusts that might use the grantor's SSN. But many trusts, especially IRA trusts filing Form 990T, do need an EIN. Don't confuse with pension plan trusts. Created a pension plan. If you need an EIN for plan reporting, specify plan type. Note. If getting a trust EIN because of a new pension plan, check Other on line 9A and write Created a pension plan there too. Other. Catch all again. Specify the reason clearly, e.g. newly formed state government entity or that foreign-owned U.S. disregarded entity filing Form 5472.
That really clarifies the why. Okay, thinking about timing, lines 11 and 12 seem crucial for setting the clock. Line 11, date business started or acquired. Yes, this sets the official start date for tax purposes. It's the date your new business actually began operations or the date you legally acquired an existing one. If you changed your structure, it's the date the new entity started. For trusts, it's usually the funding date. For estates, the date of death. Getting this date right establishes when your first tax period begins. And line 12, closing month of accounting year. This sets your tax year end, right? Calendar year versus fiscal year. Are the rules on what you can choose?
Exactly. This determines your tax year. Most individuals and sole proprietors naturally use a calendar year ending December 31st.
Yeah.
But other entities have specific rules. Partnerships often must align with the tax year of the majority partners or principal partners, or use a method called least aggregate deferral unless they qualify for and elect a different fiscal year under specific rules, like Section 444, ECMX. Must use a calendar year, new choice. Personal service corporations, PSCs, generally must use a calendar year unless they prove a business purpose for a fiscal year or make a Section 444 election. Trusts also generally must use a calendar year, with some exceptions for tax-exempt and charitable trusts. So you don't always have free reign to pick any month. You need to follow the rules for your entity type.
Good to know.
Yeah.
Okay, shifting to employees specifically. Lines 13 through 15. Line 13 asks for the highest number of employees expected in the next 12 months. Just an estimate.
Yep, just your best estimate for the next year, broken down by agricultural, household, or other. Put 0 if you expect none. If you put 0 in all categories, you can usually skip line 14.
And line 14 is that interesting one. Do you want to file Form 944? This is that potential shortcut for really small employers, right? File once a year instead of quarterly.
Exactly. It's designed to reduce burden. If you expect your total annual employment tax liability, Social Security, Medicare, withheld income tax will be $1,000 or less, you might be eligible. That usually corresponds to total wages around $5,000 or less, a bit higher in U.S. territories.
Sounds great. File once, not 4 times. Any catch?
Big catch, and a common trap. If you check this box on the SS4, you must file Form 944 annually, even if your liability ends up being higher, until the IRS tells you in writing to switch to the quarterly Form 941.
Oh, wow. So you're locked in unless they release you.
Pretty much. So only check it if you're quite confident you'll stay under that threshold. If you don't check the box, you default to filing Form 941 quarterly.
Okay, that's a really important heads up. And line 15 is first date wages or annuities were paid. Pretty self-explanatory.
Mostly, yes. It's the date you first paid or expect to pay wages. If you don't plan on employees, put NA. It also applies if you're a withholding agent starting payments to non-resident aliens. It just flags the start date for potential payroll tax obligations.
Makes sense. Okay, lines 16 and 17 are about describing your main business activity. Line 16 gives broad categories. Feels like the IRS trying to put you in a general bucket.
That's exactly it. Check the one box that best describes your principal activity, helps with statistics and industry classification. The categories are pretty broad: construction, real estate, rental and leasing, manufacturing, transportation and warehousing, finance and insurance, healthcare and social assistance, accommodation and food services, wholesale split into agent, broker, and other, retail. If none fit, check other.
And then line 17 is where you provide the specifics based on that category.
Precisely. Line 17 needs a more detailed description. So if you checked construction on 16, here you might write residential remodeling contractor or commercial electrical work. If you checked real estate and your specific type of REIT, you'd clarify mortgage REIT or office building REIT. The more specific you are here, the better the IRS can classify your business accurately.
Got it. We're almost there. Line 18 asks about a previous EIN, and then the signature block. Line 18 first, just yes or no if you've had one before.
Yep, straightforward checkbox. Has this specific applicant entity ever received an IIN before? Yes or no? It's just for their internal records. Below that is the third-party designee section again, which we already covered, authorizing someone else just for this application process. And remember that special rule: if the designee's contact info matches the applicant's, you must mail or fax.
Right. And finally, the signature, the final step to make it official. Who actually needs to sign this? Does it have to be the responsible party?
Not necessarily the responsible party from line 7, but someone with legal authority for that specific entity type. The signature validates the whole application. For an individual applicant, the individual signs. For corporation, the president, VP, or another principal officer. For a partnership, government entity, or other unincorporated org, a responsible, duly authorized member or officer who knows the entity's affairs. For a trust or estate, the fiduciary, trustee or executor, foreign applicants have a bit more leeway. Any duly authorized person can sign.
Okay, so the signature needs to be by someone with the proper authority for that entity type.
Exactly. And by signing, they're attesting, under penalties of perjury, that the information is true, correct, and complete. So double-check everything before signing.
Absolutely. Wow, that was a thorough walkthrough. You've really broken down what can feel like a very intimidating form into manageable pieces. Before we wrap up, if listeners need more help or want to dig deeper, where should they go? Besides re-listening to this, of course.
Of course, the absolute best starting point is always the IRS website, irs.gov. For general business tax info, irs.gov businesses is fantastic. For forms and publications, irs.gov forms pubs. You can download everything there, or even order paper copies via irs.gov order forms.
Any specific publications you'd recommend related to this?
Definitely. The Form SS4 instructions themselves mention several key ones. Pub 15, the Employer's Tax Guide, is essential if you have employees. Pub 538 covers accounting periods. Pub 583 on starting a business is great. And Pub 1635, Understanding Your EIN, dives specifically into the number itself. They're really valuable resources.
Good suggestions. And lastly, every IRS form has that Privacy Act and Paperwork Reduction Act notice. A quick translation: what does that actually mean for someone filling out the SS4?
Yeah, it looks official and maybe a bit scary, but it's standard. Basically, it tells you why they need the info to comply with tax laws, specifically Section 6109 requiring the EIN, how they might use or share it with Social Security, Department of Justice, state tax agencies, treaty partners, law enforcement in specific cases, and the consequences of not providing it: can't get an EIN, or providing false info penalties. It also gives that interesting time estimate they figure it takes, on average, over 8.5 hours for record keeping, plus about 40 minutes learning about it and almost an hour preparing and sending it.
Wow, over 10 hours total estimate.
That's their average burden estimate, so it acknowledges that while it's just one form, it represents a significant piece of administrative work to do correctly.
Definitely puts it in perspective.
Okay.
What an incredible deep dive. We went from the basic idea of an EIN all the way through every line of that SS4. It might seem like a beast, but hopefully, with this breakdown, you, our listener, feel much more equipped.
Absolutely. And what's really interesting is seeing how this one form, this one number, connects to so many different business structures, tax obligations, and compliance requirements.
Yeah.
Getting these foundational administrative steps right, like the EIN application, it really is fundamental to building a solid, compliant operation. It empowers you.
So, as you think about your own business journey, maybe consider not just this initial application, but how future growth, future changes might interact with the IRS system. How can your understanding of these basic tax ID elements help you navigate what comes next?
It's about being proactive, having that knowledge base.
We really hope this detailed look at Form SS4 leaves you feeling more confident and ready. Remember, you can always come back to this deep dive if you find yourself tackling that form down the road. Thanks so much for tuning in.
Thanks, everyone.
We'll catch you on the next deep dive.